Hi everyone, welcome to the channel. Today our focus is going to be on the company Robinhood Markets, ticker HOOD. The company provides financial services for trading stocks, ETFs, options, and crypto through its mobile app and website. The company has been around since around 2013, but only went public in 2021, so publicly available financial data is limited. In this video, we'll look at Robinhood's financials, perform a stock valuation, and at the end of the video, we'll go into computer modeling to forecast the 52-week stock movement. So let's jump right into it. Here's Robinhood's financials, and first thing I'll point out is the far right bar in each of the graph represents the trailing 12 months, so the first three quarters of 2023 and Q4 of 2022. And as I mentioned in the beginning, the company only went public in 2021, so as you can see, we only have 5 years of financial data. But let's just take a look at revenue, and we can see revenue had a nice, actually pretty significant growth from 2019 into 2021, but then that drop off of 25%. Good news is trailing 12 months able to recover. So we'll see what happens when they release their 2023 results to see if they can surpass 2021. But at least the trailing 12 months shows a nice recovery there. We can see the 30% gain from 2022. So I'm glad to see they're getting back on the right track. Net income. So I know this chart is a little difficult to see some of these numbers just based on those valuations. But back in 2019, they were negative about 107 million, and 2020 they turned it around, actually positive, so 7 million. So no, for an early stage company, it's not uncommon to be to have some negatives, but it's nice to see back in 2020 they did turn positive. However, we can see this big drop off in 2021, minus 3.7 billion. So the only good news here is 2022 able to turn it around. Yes, still negative 2022 and trailing 12 months, but heading in the right direction, heading towards getting net income positive again. And I will point out back in Q2 of 23, they were net income positive. And according to management, Q3, they would have been net income positive as well. But due to some financial accounting they had to take into consideration, it turned negative. But hopefully moving forward, they can get back to being positive, which I think this company needs to help improve their stock price as well. Earnings per share, following the same trend as net income, obviously. We can see that big drop off in 2021 and then some recovery in 22 and the trailing 12 months. So, same thing. Hopefully, they can get this net income positive so earnings per share can be positive. And then book value per share, 2019, 2020, that was negative, but when they went public in 21, you see the big jump up, but then the drop off in 2022 and the trailing 12 months. What you really want to see are these bars going up and to the right. So hopefully they can turn the book value per share around and start heading in the right direction. Dividends, they don't pay dividends. Early stage companies, probably not going to see dividends being paid for a few more years at least. And then shares. So we can see the big jump up from 21 into 22, up 78%, slightly down over the trailing 12 months, but still early stage company, it's not uncommon for them to pay employees with stock-based compensation. However, if you're going to invest in this company, you want to track this over time. You don't want to see this getting out of hand. This is the one chart you actually want to see the bars going down and to the right. So take a closer look at shares, especially when they release their 2023 results. We'll see what happens. Hopefully, it stays at least about the same, but you don't want to see any significant increases with the share counts. And then we see free cash flow. In early years, they were positive, but then in 21 and 2022, they went negative. And the only good news here is the trailing 12 months. Looks like they're able to turn it back around, back into positive. So hopefully that continues. And then right next to it, free cash flow per share. Obviously, taking the same path with these bars. Negative in 21 and 2022, and then trailing 12 months, able to turn it around. So hopefully that continues. And revenue per share, early years, they had a nice growth there, but we see in 2022 it dropped off significantly. But good news, trailing 12 months, starting to turn it around, and hopefully as they move forward, this continues to go up and to the right. But let's move on now, and we'll perform the stock valuation. Here's the valuation for Robinhood, and we'll discuss about making some modifications to this in a moment. But what I have for an intrinsic value, we can see here is exactly $10, and with a 70% margin of safety, that brings it down to $7. And the stock is currently trading around $11. Now, my valuation is based on a 12% short term growth rate over the next 8 years with a 10% discount rate and a 3% long term growth rate. Now, the reason why I'm only using 8 years is because the company has not been able to provide consistent growth for either their revenue, net income, and free cash flow, as we saw when we looked at their financials. But let's just say we do want to use a 10-year short-term growth rate. We'll see how that impacts the valuation here. So let's turn this growth rate from 8 to 10. And with that, we can see intrinsic value jumps up to just over $11, and with the same 70% margin of safety, brings it down to 781. So kind of in that range where they're currently trading, as I mentioned, trading around $11. So if you look at a 10-year growth rate for that 12%, this is where you're going to be at. Now, I'm sure some are thinking the 12% growth rate might be on the lower side. This is a growth company, should be something higher. So let's change the growth rate to 15%, and we'll see how that changes the valuation. And with that, the intrinsic value jumps up to just over $14. And with that 70% margin of safety, brings it to just under $10. Now, the reason why I'm using a 70% margin of safety is because I do think there's some good amount of risk investing in Robinhood. As I mentioned, and as we saw again, their financials have not been that consistent. And also, if they release their fiscal year 2023 results and they do not meet expectations, I think it's going to have a serious impact on the stock price. Now, I'm still more comfortable using my original valuation for Robinhood with the 12% short term growth rate over the next 8 years, giving us that intrinsic value at $10. And with that margin of safety, bringing it down to 7. So between that $7 to $10 range is where I'd feel comfortable buying into Robinhood. Though I do think there's good potential for the company, I do think they're going to grow. It's just a little too risky. But if I really did want to invest and take that chance, I'd probably go the options route and buy in a call option. If they release their 2023 financial results and it's much better than the expectation, yeah, this price, their stock price currently at $11 could jump up. So I would go that options route potentially. So I might think about it over the next week or two. But let's move on and we'll jump into the computer modeling now and forecast the 52-week stock movement. Here in the computer modeling software, I already ran the analysis using two methods. First, the M5 rule shown here, and the other is random forest. And since this company only went public in 2021, there's limited stock price movement history. So not the most ideal for the computer modeling, but let's see what the results show. So this data is as of January 16th. And the far right hand column here is the average weekly stock price, and the column right next to it here is the weekly average S&P ETF price. And the other columns are just other various data points used for the analysis. Now, let's jump down 52 weeks just to see what the forecast is out in January of next year. And we can see here, it's showing a price of $10.74, so slightly lower than where we are today. However, if we look at the weeks just prior to this, we can see it's predicting the price to get into the $14 range. So let's now jump over to random forest and we'll take a quick look at that. And then I did copy all this information and paste it into Excel, and we'll go over to Excel, look at it a little closer since it's a little easier to see. So here in random forest, so same thing, data as of January 16th, and we're gonna scroll down 52 weeks. And what it's showing is an outlook in January of next year, actually a lot higher than where we are today at 3150. Now, as I stated, this data is limited for the historical stock price movement. So I'm kind of questioning the results here from Random Forest. I think this is a far stretch for the stock to recover this much. But let's go over to Excel and look at all this data a little closer. Back in Excel, I already pasted all the data from the computer modeling. And first thing I'll point out is that vertical red line represents this previous Tuesday, January 16th. And everything to the left of that vertical red line represents the historical stock price for Robinhood. And everything to the right is the forecasted. Now let's look at a little history of Robinhood stock price. And we can see here, they went public in 2021 at a pretty high valuation at about $35. She jumped up, getting to over 50, but then had that steep drop off in 2021 going into 2022. And it's really been around the $10 mark ever since. And where we are today is just under $11 now, about $11, I think 93 cents or so. But now I'm going to jump over to another tab where we look at the forecast a little closer. So looking at the M5 rule now, I'm going to look to the right of that vertical red line. And we can see here the blue line is just showing basically a same pattern that we've been seeing for the stock price on Robinhood for about the past 2 years or so, just hovering around that $10 mark. For the most part, it is showing being just above $10 with a few dips below it, getting into the nines and maybe even the eights out into October. But then we can see in December, they do have that big jump up, getting up into $14, but then dropping off at the end of the year into early January 2025 and closing at around $10.70, which would be a slight decline from where we are today, about a -1 to -2%. Now let's look at Red in the Forest a little closer. As we saw in the computer modeling, had a big jump up over this year is what it's predicting. So let's go over to that one. Now looking at Random Forest, it has this big pop in the stock price, pretty much happening right away. And the only way this is possible is if their fiscal year 2023 results just blows away expectations. And I am not confident that this will happen for the company. But if it does and it has this big recovery in the stock price, this prediction is showing out in early part of January 2025, the stock to jump almost 200%, getting into the $30 range, but I'm not expecting this to happen. But let's just look at the average. Now, taking the average of the two methods, the M5 rule and random forest, we can see the big jump up in the stock price. Not as significant as random forest, but still has that big jump up, getting up into the low $20 range. Now, maybe this is a little more possible if they do exceed these expectations. But again, I'm not even this optimistic that they can get up back into the $20 range. But if they do and it sustains into January 2025, this would be an increase in the stock price at just over 90%, maybe more around the 93, 94% if this does play out. To recap, I believe the fair value of the buy into Robinhood is between $7 and $10, with the lower end taking into account a margin of safety. While the current stock price is trading around $11, which I feel is a little too high for the stock. For the computer modeling, the M5 rule shows the stock staying just over $10 price for most of the year, with a few dips into the $9 and even into the $8 range. But recovering by the end of 2024 and getting as high as $14, but then closing out the 52 weeks slightly less than the current stock price. While Random Forest method has what I believe is an unrealistic optimism, with the stock reaching the $30 mark to close out the 52 weeks. So I hope you enjoyed this video and got some useful information. If so, consider subscribing, and I'll see you next time. Thanks for watching.